Hello everyone, welcome back to Stock Market Meridian. Today is 5th August 2026 and you're watching today's post-market report. Let's begin with today's market action. Today the markets opened with a slight gap up. However, throughout most of the trading session, both Nifty and Sensex remained under pressure. But once again, just like yesterday, the final 30 minutes completely changed the mood of the market. Nifty rallied by nearly 100 points, while Sensex surged around 200 points, helping both indices close in the green with modest gains. This strong late buying suggests that investors are still willing to accumulate quality stocks, despite intraday weakness. Now let's look at the sectoral performance. Today's top gaining sectors were metal and auto. On the other hand, media and private banking emerged as the biggest losers. Now let's move to the important geopolitical developments. Fresh reports from international news agencies and satellite thermal imagery indicate that a major fire broke out near Dubai's Jebel Ali port, one of the Middle East's most important logistics and fuel hubs. Local reports suggest at least 7 explosions occurred within just 20 minutes inside the industrial area. NASA's thermal imagery also confirmed a warehouse fire near fuel storage facilities adjacent to the port. Although UAE authorities acknowledge the explosions, they have not yet officially confirmed the exact cause or the extent of the damage. Reports also suggest that 2 individuals were detained for filming the incident. Meanwhile, regional tensions continue to remain high. The Houthis claimed they attacked the Saudi oil tanker Wafa in the Red Sea using ballistic missiles. At the same time, explosions were reported in Yemen's capital Sana'a, while military operations continued across Gaza and the West Bank. These developments come as diplomatic talks involving the United States, Iran and Oman continue regarding the reopening of the Strait of Hormuz, making the overall geopolitical situation highly sensitive for global markets. Now, let's discuss today's biggest domestic event, the RBI Monetary Policy. The Monetary Policy Committee, led by RBI Governor Sanjay Malhotra, unanimously decided to keep policy rates unchanged. The repo rate remains at 5.25%. The standing deposit facility rate stays at 5.00%. The marginal standing facility and bank rate continue at 5.50%. The RBI has also retained its neutral policy stance, indicating that future decisions will remain data-dependent. There was some positive news as well. The RBI upgraded India's FY27 GDP growth forecast to 6.7% from the earlier estimate of 6.6%, reflecting confidence in strong domestic demand and manufacturing activity. On the inflation front, the RBI slightly lowered its FY27 CPI inflation forecast to 5.0%, while mentioning that temporary inflation spikes may occur due to seasonal food and energy prices. Another encouraging point was that foreign portfolio investors recorded net inflows of $7.1 billion during June and July, indicating improving confidence in Indian equities. Now let's move to the SEBI update. SEBI has made it clear that it currently has no plans to modify the newly introduced closing auction session or CAS framework. Despite some initial volatility during its rollout, the regulator believes the system is functioning as intended. The new mechanism replaces the earlier VWAP-based closing price calculation for F&O stocks, aiming to improve price discovery, institutional order execution, and index accuracy. SEBI also stated that increasing market participation will naturally reduce volatility during the closing auction window. Overall, the regulator has indicated that the CAS framework is here to stay. Now let's discuss a very positive development for Indian markets. Global investment bank HSBC has upgraded India to neutral in its Asia strategy. According to HSBC, if global emerging market funds simply increase their allocation back to neutral, India could receive nearly $25 billion in fresh foreign investments. The bank believes the earlier rotation into AI-driven markets such as South Korea and Taiwan is gradually slowing, making India an attractive destination once again. HSBC continues to prefer sectors like financials, automobiles, healthcare, retail, capital goods, infrastructure-related businesses. Some of its preferred Indian stocks include ICICI Bank, Mahindra & Mahindra, Titan, Hindalco, Cummins India, Adani Ports, Phoenix Mills, Fortis Healthcare, and several others. Another important market outlook has come from Axis Direct. The brokerage believes that in a bullish scenario, Nifty could touch 28,615 by December. Its base case target stands at 27,220, while the bearish scenario projects around 23,030. Axis Direct expects corporate earnings to grow at over 13% CAGR over the coming years. The brokerage remains overweight on BFSI, telecom, capital goods, healthcare, auto, power and energy. However, it remains cautious on the IT sector sector because of increasing AI-related disruptions. Axis Direct also recommends investors maintain 10 to 15% cash to take advantage of future market corrections. Now let's move to an important corporate development. Volkswagen's global leadership team is scheduled to visit Mumbai on 18th August to finalize its strategic partnership with JSW Group. The proposed alliance is expected to include joint manufacturing, future vehicle development, fresh capital investments, long-term India expansion plans. For Volkswagen, this partnership strengthens its manufacturing presence in India. For JSW Group, it significantly expands its ambitions in the automobile sector alongside JSW MG Motor India and its upcoming JSW Auto brand. Ola Electric remained one of today's biggest gainers. The stock rallied more than 7% after signing a major memorandum of understanding with Axis Energy. Under this agreement, Ola plans to deploy up to 20 gigawatt-hours of battery energy storage systems by 2032. This marks the first major partnership under Ola's new Mahashakti battery storage platform, which is expected to launch on 15th August. With India's battery storage demand projected to exceed 400 gigawatt-hours by 2032, this partnership could significantly strengthen Ola's position in the renewable energy ecosystem. Apollo Microsystems received fresh defense orders worth 213.39 crore rupees. These orders have been awarded by DRDO, defense public sector undertakings, and private defense partners. The new contracts further strengthen the company's order book and reinforce its leadership in defense electronics. Another major order announcement came from SEPC Limited. The company has secured a massive 854 crore rupee project from SAIL. Interestingly, this single order is nearly 75% of SEPC's total market capitalization, making it one of the company's biggest ever contract wins. The project relates to SAIL's Burnpur steel plant expansion, with execution expected over the next 32 months. This significantly improves SEPC's long-term revenue visibility. Now let's quickly discuss today's important quarterly results. First, Berger Paints. Most financial parameters showed healthy improvement. Only the net profit margin witnessed a slight decline on a quarterly basis. Overall, the results remain positive. Next, Whirlpool. Revenue registered strong growth. However, EBITDA, net profit and profit margins declined on a yearly basis, indicating pressure on profitability. Next, Shilpa Medicare. Net profit and net profit margin declined sequentially. EBITDA margin also weakened on a yearly basis, while the remaining financial parameters showed improvement. Next, Bondada Group. Revenue, EBITDA and net profit declined on a quarterly basis. However, all these parameters improved on a yearly basis. The biggest positive was that both EBITDA margin and net profit margin improved strongly on both YOY and QOQ basis. And that's all for today's post-market report. If you found this video helpful, don't forget to like, share and subscribe to Stock Market Meridian for daily pre-market and post-market analysis. I'll see you again tomorrow morning with another detailed pre-market report before the markets open. Until then, thank you for watching. Signing off, Jai Hind.